our top business story. The UAE has drawn up a draft bankruptcy and financial restructuring legislation and has referred it to the Ministry of Justice, press reports suggest, citing a Ministry of Finance official. With that, the draft law reaches its final stages before enactment. The legislation will overhaul how the authorities deal with individuals and businesses with debt burdens they cannot pay back. The law will help companies work on their restructuring and on repaying their debt without decreasing their productivity, the official was quoted. The draft has been jointly issued by the Ministry of Finance, the Ministry of Economy and the Central Bank of the UAE. After approval by the Ministry of Justice, the legislation will be submitted to the Cabinet, then to the Federal National Council, and finally to the President for his assent. The current political and economic climate in the Middle East is changing the face of the region's finance industry, according to experts. At the third annual Regional City Day conference in Dubai, finance professionals from across the region focused on how the industry must, quote, capitalize on change. One is that the financial services industry is becoming more transparent, which brings along exciting opportunities for regional investors and financial services firms, business advisor SunGuard said. Also, the industry is changing due to the growing number of high net worth individuals, which demand high-quality financial advising and better access to trading opportunities around the world.
Indeed, we are today discussing one concept, which is called capitalize on change. Capitalize on change that has three pillars: on transparency, efficiency, and networks, and we call them the 10 concepts. So under these 10 concepts, what we're trying to identify, or what we have identified by talking to our experts and customers, is that we can capitalize on change, especially what's happening worldwide and what's happening in the Middle East.
Panelists opened the floor to the public, financial analysts and business leaders from the UAE and the region, allowing a platform to voice their opinions and concerns when it comes to finance. Meanwhile, Abdullah Mohammed Al-Awa, CEO of the DIFC, believes a rethinking and consolidation of activities in the finance industry will encourage professionals to find new business opportunities, whether regionally or globally.
There has been quite a number of developments if we look at the past 2 years in this region, and with these developments came opportunities as well that the various countries could capitalize upon. We spoke a little bit in the panel about those opportunities. Certainly, the indications, from the Arab Springs are clear in terms of what the government should be focusing on. Again, the basic needs, I would say, of the population, such as education, healthcare, and so forth. But from an economic perspective, it will bring out a lot of other opportunities.
Shares in the UAE ended mixed today. However, the GCC's main stock indices ended on a lower note. Here's a quick overview. Is Germany the next country to be pulled into the downward spiral of the Eurozone debt crisis? Yesterday, Germany failed to get enough bids for its 10-year bonds offered for sale, propelling borrowing costs in Europe higher and the euro lower. We have Bruce Powers, Head of Research at Trust Securities, here with us to discuss the issue. Welcome, Bruce.
Hi, Linda.
How are you?
Good.
Why are investors now turning away from Germany? I don't understand that logic. It was always considered a safe haven, no?
Yeah, it was. Well, this is, we see investors' appetite for risk diminishing as the crisis spreads. Germany has been the strongest and largest economy and has been seen as a safe haven. That may now be starting to change. This is really an alarm bell, a sign that investors may seek even higher rates in the future. So what we're seeing is possibly the beginning of a trend of higher yield requirements for German debt, therefore increasing their borrowing costs. So this is a trend that investors are perceiving. Therefore, they're looking at higher risk for Germany because of everything that's going on in the debt crisis in the Eurozone as a total. At the same time, we have a risk of recession that is increasing, and Germany will not be immune to that. It's only a matter of time before investors require even higher rates. So this is what's happening in the markets now.
We just heard that Angela Merkel strictly opposes Eurobonds, where Eurozone nations jointly tap the bond market, sell their debt. What are the pros and cons? Why is she against it? What do you think?
Well, this would really increase the liability that Germany has towards some of the Eurozone debt. It would put a bigger burden on the taxpayers, which is very politically difficult for Germany. At the same time, it would take away one of the bargaining chips that they have to push weaker countries to implement stronger fiscal discipline, which they feel is very important to keep the Eurozone intact and the economy intact as well. Now, there are a number of strategists that believe that issuing a common bond is really the only way to keep the Eurozone intact. And, of course, we know that Germany remains vehemently opposed to that. Even yesterday, we saw the European Commission come out with a proposal for Eurobonds. I think that more and more people now are starting to realize that really this is probably the only potential final solution that may actually work. It's now a question of how long it's going to take to actually implement, or I should say agree to possibly implement it.
We'll see what happens. Thanks for coming in. Happy Thanksgiving, by the way.
Thank you very much.
Bruce Powers.